Hello, I am the Stock Options Hero, and from here on out, I'm going to share with you stock options secrets that only the most successful option traders know. In my videos, you are going to see my secret options trading system that only a handful of people know. And as I'm sure you're well aware of by now, options trading can be very lucrative. However, most options traders are not consistently successful, or even worse, lose money trading stock options. Trading stock options can be a high probability trade if done properly. Let me show you. Now, each day I will record a video where I play simulated options trades. So subscribe to my channel and watch my videos daily to learn how you too can be a successful stock options trader. Disclaimer: these videos are for educational and entertainment purposes only and does not constitute a recommendation to buy or sell any securities or stock options. Before I dive into today's stock options video, I have a small favor to ask. If you like this video or any of my videos, please subscribe to my channel and hit the bell icon so you will see my videos as soon as they are posted. This way, you won't miss out on any paper trading ideas. Tell me in the comments section which option trades you are looking at paper trading, and if you're lucky, I might do analysis on a ticker symbol from the comments section. All right, let's leap into today. Welcome to another exciting video of Options Trading for Beginners, brought to you by me, the Stock Options Hero. Oh yeah, let's leap into it. Okay, so let's take a look real quick on the day. PL day for the portfolio is 669. PL opens 1583. Net lick 115,071. Cash and sweep 127,950. So yeah, up 15% in about a month. Pretty happy with that. Okay, so looking at SPX on a 5-day, 5-minute time frame. Before I started the video, I was looking at putting on an iron condor, which is simply a bull call spread a bear call spread with a bull put spread. So I've got the wings 5 strikes wide, and the short strikes is 41.35, 41.10. So 41.35 is right here. So, and then 41.10. Come on. 41.10. Okay. And actually width, there we go. Make it a little thicker. So 41.30. So just to show you, it was the 41.30, right? 41.35. Okay, my bad. 41.35, 41.35. So with this 0DTE iron condor, as long as SPX stays between these two horizontal lines, then we will achieve max profit. The reason I'm considering an iron condor today is it's just been trading at the mean on the 5-day, 5-minute chart here. So why not capture premium on both sides? Okay, so we can get, let's go for $1, shall we? So once again, ROC is calculated by dividing your max profit by your buying power effect, 25%. So risk $2,000 to make $500, which is a return on capital of 25% in a single day. So 25% return on a single day. And looking at the 41.35, so the 41.35 has a 15 delta with an 85% probability out of the money, and the 41.10 has a 16 delta with an 83, roughly 84% prob OTM. So 85% chance of making 500 and a 15% chance of losing 2,000. So for 85% probability of success, I'm willing to make 25%. I'm willing to risk $2,000. So as long as SPX stays in this tight range, we're going to make $500 today. And then switching to the one, well, we'll do a 6-month daily. So yesterday traded in a tight range. Today has the appearance of staying tight. And if you look historically, there have been several days in the past 3 months where SPX is traded in a tight range. So it's not uncommon to see SPX do this. Let me just remove that drawing. So I'm thinking today will stay in a tight range. It's already 1:16 p.m., so there's only a few hours left of the trading session. Unless there's some major news announcement, I expect us to continue trading in this tight range. So let's go back to our portfolio. Take a look at some of our biggest losers right now. TGTX 25 call. Okay. Yeah, I'm hoping it will revert back to the mean around 24 a share. At which point we should get out at around the credit we took in when we put on the trade. So basically trying to scratch the trade right now. IMGN, we're short the 11 and the 14 call. Okay, so defying gravity a little bit. As long as it stays below the 14 price level, I feel fairly confident it will fall back down in the next few days. I don't see it sustaining these lofty valuations for the next 38 days. Fairly confident we will get out of this trade within the next week, 5 to 7 days. Not worried. C day 60 put. Okay. Yep, still looking okay. Not too concerned yet. H-band, the 10 put. Okay, it's in the money. I don't like the downward trend. That is somewhat concerning, but I'm hoping that it reverts back to the mean, at which point we will get out of the trade, as you can see with our open limit order to close out the trade. You have to be patient with this strategy. If you are an impatient person, then the strategy may not work for you. But if you like to learn patience and managing risk, this is an excellent strategy for you. And that's why I like going out 45 days, so you've got the time for the trade to go your way as the theta decay erodes the value of the option you sold. So DKNG 2250. Oh, looking all right. Once again, I'm expecting a reversion to the mean here. So nothing overly concerning at this point. We'll look at one more, CPRI 3750. Yeah, pretty confident it will revert back up to the mean by expiration. And we have more winners on PL Open than we have losers. Overall, we're still up 1382.50, even with some significant losers. Our winners are more than making up for it. So, pretty happy with that. So, the Iron Condor is not cooperating. So let's go back to SPX real quick. 5 day, 5 minute. Okay, why don't we drop our credit, drop it down to 90 cents. It will still be a 20% return on capital, which is completely acceptable. The minimum I go for is a 10% return on capital. Okay, so let's run a quick scan for the day. Okay, change this to a 1 year, 1 day. Okay, start at the highest implied volatility and work our way down. Mhm. I'm just curious about something. No, we already have this 15 and 1750. Yeah, it's all right. Not forcing the trade. There's plenty of opportunities out there. Got like a 15 strike. Yeah, above 10%. The 15 strike has an 87% implied volatility with 78 probability OTM. So go back, look at the 15 down here, an upward trend. No. Gonna pass on that one. I know we've looked at this and we do have a bear call spread on it. Here at the 21. So we're good on that. Okay, so they beat earnings. Let's look at the 2250. 55-cent credit. So 55 divided by 270, 20% return on capital. Let's do 3 GTC. Risk 810 to make 165. Let's do it. Moving on. Yeah, we're already in this. Yeah, thought we were in this one as well. We're at the 1750. Not getting nervous just yet. No, I'd rather see some strength before writing a bull put spread on it. Okay, so no open order on this one. Can we do a 90? Fair call. Okay, so the 90 strike is at an 18 delta. So if we write at 90, 95, bear call, 50 cent, 57 cent credit. Excuse me. Gives us a 12.8 ROC. We could do 2 contracts. GTC, risk 886 to make 114. Moving on. I think we're already in Etsy. We are. I think we're in CLF as well. Yep. Okay. Okay. So kind of like this one. Okay, so I like how it's training sideways. I like where the MACD and stochastic are. It could totally retrace back around 3150. But once again, I don't go for a perfect move. I look to capture roughly 60 to 80% of a move. It's extremely difficult, almost impossible to capture 100% of the move. So not going for perfection or a grand slam. I'm going for single base hits, to use a sport analogy. So what about a 30? Okay, so 30, 25, 67 cent credit. Okay, so 67 divided by 364, 18% ROC. We can do 3. So risk 1093 to make 201. Okay. 55. So the 55 is a 26 delta with a 68. Okay, so let's go back to the chart. 55 is right here. Feel better about a 50. Do like a 50, 45. That's near 10%. Okay. And that's a 13 delta, 82% probo TM. I would like a better credit, but I also like taking on less risk. If I can take on less risk and still get 10% return on capital, I'd rather do that than take on more risk for more credit, because it could always be a losing trade and you end up taking a loss when you could have been more safe with a strike further away, out of the money strike, basically. Okay. So we're almost to the once I get to like under 50 delta, I normally stop looking through my watch list. Looking at this, it's gone from $30.83 down to $18.04. So pretty substantial loss in value. And if you look historically, sorry, that's a weekly. Come on, 2-year daily. Even on a 2-year time frame, it's only touched the bottom LRC once, and we're getting close to touching it a second time. If we look at a 1-year daily, it hasn't touched the bottom LRC. This is the first time it's done it in 12 months. So let's go ahead and write a bull put. See, 40 cents. So 40 divided by 210. So 19% ROC, or what? So either 19 or 18. So 19% if we do the 1750 and the 15, or an 18% ROC if we do the 15, 1250. Right? So which one is less risky? Go ahead and put that below in the comments. Let me know which one you would do and why. Thanks. So for me personally, I'll do the 15 and the 1250. Wait a minute. Or was that the 1750 and the 12? Yeah, I guess I did the 1750 and the 12. Okay. So even with the 1750, it's way down here. I think it's incredibly unlikely to stay that depressed until expiration. It will most likely revert back up to the mean, or at least around 2250 would be my guess. So let's do 5 contracts. Risk 1050 to make 200. There's that. And let's go back to SPX. I didn't even notice if we got a fill on that. No, we did not. Are we chasing? Looks like SPX is playing hard to get today. Fine. Well, let's look at the chart real quick before we reduce our limit price. Okay. 80 cents is as low as I'm willing to go. If it doesn't fill, then, oh well, we'll just wait until tomorrow for a trade on the SPX. We started off at $1. We reduce it down to 90 cents, and then now we're down to 80 cents. So, you know, you just got to draw the line at some point. And, yep, 80 cents is as low as I'm willing to go on this iron condor on SPX. So, yep. So that's it for the day. Make sure you ask your questions or feedback in the comment section. We're nearing day 30. I'll do a review video on my performance over the last 30 days, and I'm thinking about dedicating the next 30 days to a 0 DTE strategy on SPX to see which strategy has a higher rate of return, right? So if my 45 days till expiration was more profitable, or if a 0 DTE is more profitable in a 30-day window, and which one required more work and more effort, right? So the 45-day till expiration doesn't require a significant amount of time, where I could see the 0 DTE requiring more attentiveness, where I have to watch the chart more actively throughout the trading day. I like to put on trades and forget them when possible, and I don't like being tied to a chart throughout the day. But I can also see how it may take less time once I figure out an ideal strategy. So, thanks for watching. You guys and gals are awesome. Make sure you like, share, and subscribe, and I will see you in my next video. Happy trading. Take care.